Hello friends, let's now in this lecture learn about journal entries. Now we will learn how to record the transactions of the business in a book called as the journal, the accounting book. So what we are going to do in accounting is we are going to record the transactions of the business. We are going to record the transactions of the business for the first time in a book called as the journal. The journal is also called as the book of first entry. Okay, so what we are going to do in accounting, finally, what is accounting? Accounting is about recording of information. Information we are going to record? We are going to record the transactions which are incurred in a business, and we do some things to make that information useful to the business. So we are going to make the information useful to the business. This is what we do in accounting. We record the information relating to transactions of a business, and we do some more things so that the information becomes useful to the businessman. Okay, now where we are going to record the transactions? We are going to record the transactions in a book called as the journal. Because we are going to record them in a book called as journal, we call them as journal entries. Now, before we start learning how to record journal entries, we will just have a recap of the golden rules of accounting which we have learned in our earlier lecture. We said in a business we are going to deal with people, we call them as personal accounts. The rules are debit the receiver from the business, credit the giver. I'll repeat once again. If a person owes money to business, we debit him. Business owes money to him. Business owes money to the person. Then in such case, we are going to credit him. You can simply write here. Business owes money to him. Then we are going to credit him. Then we talked about real accounts. We said they are assets. The rules are debit what comes in and credit what goes out. Then we talked about nominal accounts. We said these are namesake accounts. Information relating to expenses and losses should be debited. Debit all expenses and losses. Credit all incomes and gains. Before we learn how to record journal entries, we'll also discuss one more concept called as the business entity concept, or we call it as the separate entity concept. Now, what is this business entity concept? What is the separate entity concept? Now, this is an assumption which an accountant makes in his mind. So, what are we going to assume in the mind of the accountant? The assumption is business and you can say business versus owner of the business. We consider them as distinct. What we are seeing here is the business is a separate person. Owners, shareholders, promoters, the people who own the business, they are also distinct. That means they are different. So in the mind of the accountant, he is an accountant or he is serving a person called as the business. So business is considered as a person. We are doing accounting in the books of the person called as the business. So this is the main concept we have to keep in our mind. This is also called as the business entity concept or the separate entity concept. Now let us go back to our journal entries. We'll learn how to record few transactions. Let us say we have the example. We'll take a hypothetical example saying that there is a businessman, you can say a rich man, He's rich, pretty rich, he has a lot of capital, and he wants to start a business of manufacturing and selling of mobile phones, because that is the most popular, we can say, the equipment which everyone on the planet is using. So he wants to do a business of mobile manufacturing and selling. So he's going to manufacture and sell the mobile phones. Now let us say he has incorporated a company. He has registered a company to do the business. We call it as Pineapple Mobiles Private Limited. So he has started a company with the intention of doing the business of manufacturing and selling of mobile phones. Let us see what are the various transactions he is going to do and how to record it. Invest cash as capital in the business. He is introducing capital now. Let us say 10 crore rupees. He is investing money into the business. Now I have to record this transaction in a book called as the journal. How does the book look like? It is, for the sake of ease of explanation, I'm using this format. The book looks a little different, not very different. For the sake of understanding, I'll use a simpler format. Now this is how a page or a paper in the journal looks like. This is the debit column, this is the credit column, particulars, date. Now what is this column? I'll explain you later. Now I have to record some information in the debit line, and I have to record some information in the credit line. I have to record something in the debit column and something in the credit column. Now what is the entry I'm going to record here? Now the businessman, we can call him as Mr. Rich. He is investing, I'll write here Mr. Rich. He is investing cash as capital in the business, 10 crores. Now we can identify one of the part of the transaction. The part is cash. Cash is coming into the business. It is definitely an asset. So I will classify it as a real account. The cash is coming into the business. Hence I'll write here comes in debit. So what I'm going to do here is I'm going to write here cash account debit 10 crores. I'll avoid the zeros here and I'll write 10 crores here. Now who is giving this money to the business? Mr. Rich. He is the owner of the business. He is an individual. We can say personal account. He has given money to the business. We can call him as giver, hence credit. If you remember, I told you if the business owes money to some person, he has to be credited. Now the owner is giving money to the business, and we said we are recording the transaction in the books of the business. So we are, for the business, the owner is also like an outsider. He is an outsider. We have to remember that this money has been given by the owner. We have to keep a count of the money invested by the owner. So I'll write here capital account. Instead of using the word Mr. Rich here, I'm using the word capital account. So what have I done here? I have recorded two aspects of the transaction. Cash aspect, which was coming in. The owner, he has pumped in capital into the business, and by crediting him, we are recording him in the books as a giver. That means he is a person to whom the business owes money. So this is how we record the journal entry in the journal. So we debit cash account with 10 crores, debit column will write here, and to capital 10 crores. Now actually, if you see here, we are writing cash account debit 10 crores, capital account credit 10 crores. What are we writing here actually? I'll explain you. This thing is called as the journal entry in the journal. Now, what is this entry all about? This journal entry is actually an instruction to prepare cash account and capital account. What is this entry actually telling you? I told you this is the debit side, this is the credit side, this is the debit side, and this is the credit side. This journal entry is telling you to write 10 crore rupees on the debit side of cash account, and it is asking you to write 10 crore rupees on the credit side of the capital account. So this is what this journal entry is telling you. So what we are doing is we are keeping a count of the cash transactions in this cash account. We are going to keep a count of the transactions with the owner in this account called as the capital account. So this is what is the journal entry. Let us record one more transaction. Now with the money we have, we purchase some land. So the business is now purchasing land. Land purchased by paying cash. Actually, as per the regulations, we cannot use much of cash, but just for the sake of understanding, we are using the term cash here. Let us say 1 crore rupees we have paid, let us say, to buy 10 acres of land. Now, how to record this entry in the journal? I'll again draw the format of the journal for you. Please excuse my drawing skills. Don't go on the drawing skills. Please try to understand the concept. So this is how my journal looks like. This is the debit column. This is the credit column. Now the question is, what should I write here and what should I write here? What should I write in the debit and what should I write in the credit? So these are the things we have to learn. Now if you observe the transaction, we are paying cash and purchasing land. I have identified that land is the asset. It is a real account. It comes into the business, hence it has to be debited. Cash is the real account, is also a real account. It is going out of the business, hence that account has to be credited. So how will I record here? I'll write here land account debit rupees 1 crore to cash account credit 1 crore, and we'll just write a small narration here. Being land purchased for cash. This is how I record the journal entry. Now actually what have we done in this journal entry? Actually we have recorded some instructions relating to preparation of accounts. So what are we saying here? Land account. Now I need not prepare a cash account again, because if you remember, we have already prepared a cash account in our earlier journal entry. So what I'm going to do is, this entry says debit land with 1 crore. So what I'll do is, I'll go to land account, right here on the debit side, 1 crore. And this journal entry says credit cash account with 1 crore. So what I'll do is here, I'll write 1 crore on the credit side. I have spent money for land. This money had come in for capital. So if you can see now, the information is getting accumulated in the cash account, in the capital account, and in the land account. So this is an illustration of how to record journal entries. In our next video, we'll learn some more journal entries. We'll continue this example.